Hello and welcome everyone to today's very special session, live commodity market analysis with the Gold and Silver Club for the 15th of December 2016, presented by myself, Phil Carr. So during the course of today's session, we will be covering live market analysis. We will be creating a short list of trading opportunities. We'll go through a trading plan for the rest of today as we go into tomorrow. And of course, as we continue to transition into next week as well, we'll provide an overview of the commodity markets and also our top trade of the week. And of course, we'll be discussing yesterday's FOMC statement. So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, so with that, we had the FOMC statement yesterday, and I think it's important just to give you a bird's eye view of the markets at the moment, just to give you an idea of how they are performing now year to date up until the 15th of December, which we're just into. Really, we've only got a couple more weeks of the year left now. So let's have a look at the performance of the markets over this year so far. So leading the way is ethanol in first place, up 52%, orange juice up 34%, heating oil up 30%. Palladium, of course, last month we saw a huge increase, over a 20% move over November. Palladium is now up 27% this year. Crude oil up 24%, copper up 19%, silver still remaining up just under 17% so far this year. Sugar up 12%, cotton up just under 11% as well. And gold, of course, has dropped significantly lower, now up 5% on the year, where after Brexit it was up over 30%. So with that, guys, we'll move over to the charts very shortly. I've had a lot of questions about gold, as you can imagine, especially following on from the FOMC statement yesterday. What can we expect next? Is this the bottom? Do we have more downside? When do we expect the market to turn? So there's been a lot of questions, which has been fantastic. It's been an overwhelming response, and I want to break it down for you during today's session. So definitely we'll focus a lot on gold, silver, oil. If there's any questions about other commodities, we can certainly answer that as well. So we're on the gold chart at the moment. And first of all, we'll talk through the FOMC statement yesterday. So essentially, the Fed, they hiked interest rates by 0.25%, up from 0.5% to 0.75%. Okay, so that was the FOMC statement yesterday, which was to be expected. Everybody was expecting that. They delivered what was expected of them. Now, initially, we didn't see too much of a move on the markets. The US dollar was chopping about on the back of that news. Gold and silver were being supported after that statement. It came as no surprise to the markets. Now, one of the big reasons that we've seen the US dollar breaking out to 14-year highs today, we've seen gold and silver also breaking through their support zones, was due to the Fed forecasts regarding future rate hikes, which has become more optimistic. So in particular, the Fed's economists went from expecting 2 rate hikes in 2017 to expecting 3 rate hikes in 2017. So with that, we saw the US dollar surge afterwards. Gold and silver began their breakdown. Gold, most notably, as we've discussed previously, with the gold to silver ratio, you want to look at more pressure to the downside for the gold market as opposed to silver, but both are selling off today. And we want to get an idea now of what can we expect next. We are coming into really the last couple of weeks of the year now. How are these markets going to shape up over the next 2 weeks coming into January as well? Okay, so first of all, we need to go back in history, back in time. What happened last year? So this time last year, the Fed also went ahead and increased interest rates, and they also made projections that they would go ahead with 4 interest rates hikes over 2016. So we're now at December, the final FOMC statement of the year, and we've had 1 interest rate hike as opposed to 4. So that's important to bear in mind. So one of the primary reasons for the US dollar breaking out to multi-year highs right now is that the Fed has said that they're going to increase interest rates 3 times next year. So whether or not they do it, we'll see. But what we can say is that so far, off the back of the interest rate going up 0.25%, the US dollar has surged 1.4%, which is quite extreme comparison to the interest rate hike. What you also want to be aware of is the fact that gold this time last year, after the Fed increased interest rates, the following day gold reached a low, the bottom. So that is the spike low that we got, and then we rallied from that point onwards. Now, we did have a significant rally last year. It was a 1,800 point move from the low to the high in February. I don't expect the rally to be as significant once we do form a spike low. In gold and silver at the moment, you can see they're trying to form a spike low. We're getting these little bounces and then reversals, and we'll have a look at the chart very shortly. But we've got a time frame here. So either if we do have a spike low, we expect it to be in this week, either today or tomorrow. If we are going to bottom out with gold and silver off the back of the US dollar breaking out to multi-year highs, we would be looking for that to occur today or tomorrow. Otherwise, as I'm sure a lot of you are aware, next week volumes will drop in the market. There won't be as many market participants over next week and into the following week as well, which will be the last week of the year. And then what you want to look for is the potential for big inflows in January, the January effect. Hence, go back to historical charts. What happens normally over the month of January, 5-year, 15-year, 30-year cycle, you can see, especially if we're coming off the back of a very oversold condition with gold, this is where you can see big inflows at the beginning of the year, and that's what I would look for. So I'm either looking for a spike low to get formed on the precious metals today or tomorrow. Are they going to be able to create a spike low? What do I mean by that? It means essentially they'll form, you'll get a washout of gold and silver, which we're already seeing. But essentially, you'll get a spike where you suddenly see big orders come into the market and a reversal. And at that point, it gives you a signal, okay, that's the bottom. The bottom is in. But normally gold and silver, they like to wash out, flush out all the long positions before they turn. So this week will be important, either today or tomorrow. And then if we don't see much movement, if they just consolidate, they continue to break down, then you look at January and February. I get asked a lot, as you can imagine, where I perceive the turning points to be in the gold and silver market. So I would then look at January as the next one. I wouldn't try to necessarily get into too many trades here if we don't move between now and tomorrow on the metals until January now. Because January, the seasonal cycle, the inflows that we often see at the beginning of the year where traders are closing out and liquidating positions in December, squaring up their books and P&L for the end of the year essentially, and then you see big fresh inflows in the month of January. That's the next opportunity I would look at. So just bear in mind, keep this in mind, the historical chart, what we often see, particularly over the month of January and February. Okay, so that's what we're looking at the moment. So if we go over to the chart now, gold, as we discussed last week as well, it has pierced through this level of support. So first of all, we broke down through 1,140 US dollars was the low, which you can see clearly here going back to October on the chart and also going back to March 2015. So we pierced that low yesterday. We closed just about above it. Now, today so far, we've broken down to 1,125 US dollars per ounce. So again, if you were going to short gold or silver, gold was the better market to short and take advantage of. Where are the next levels of major support? Okay, so the next major levels here are 1,116 US dollars. That would be another level which I would look out for. But I'm also looking for any evidence that we're going to get a spike low from the price action that we've had this morning as well. So I am keeping an eye. Look at 1 hour, 4 hour, just look to see if we get any sort of spike low and evidence that a low is getting put in place, because this time last year was the day after the FOMC statement that the low was put in, and then we rallied after that point. So I'm watching this very carefully today to see whether we'll see big buying around the current zones. Gold right now, it's broken down to 1,125 US dollars per ounce. If we continue this move lower, we could be in for a move all the way down to approximately 1,100. I mean, we're not too far away from it now. It's only a $30 move, 300-point move. It's certainly within the realm of possibility here. And if you're selling short, what you want to do is just continue to trail down your stop loss as you continue to take advantage of the selling pressure on this market. The US dollar has broken out to 14-year highs, but is it going to be a blow off top? It's very overbought, the US dollar. Is this just going to be a reaction to yesterday's Fed statement and the potential for 3 interest rate hikes next year? Or is this going to put in some sort of a top? Again, what happens today is important. Are we just going to see a faded rally here like we got with oil last week, where we saw, or on the open certainly, where we broke out to the upside and we've had a sell-off throughout most of this week? We want to just keep an eye on this candle today. Is it going to be a fake break to the upside? It looks good at the moment. It's still following through, but this could change if we see a big rejection candle forming to the close, or an indecision candle, a doji, which would be the price opening and closing at a similar level. Yes, that sort of shows us that the bulls are running out of steam here. Now, as we mentioned last week, yes, to a certain degree, the interest rate hike, a lot of that was priced into the dollar. What wasn't priced in was the Fed to come out with a statement that they would be looking for potentially going ahead with 3 interest rate hikes next year as opposed to 2. Hence the surge in the US dollar. How much follow through will we get is the big question. So gold right now, levels, we've got 1125 is the daily low, 1140 we've obviously breached below. Now we've had a break below that zone, and yes, absolutely, we closed and broke below the 1150 zone, which was also an important level for gold here. So right now it's looking quite weak. Certainly the bears are in control here at the moment, and you can see gold and silver, they're both trying to find a spike low, but they're not really getting there yet. We're not getting that big capitulation in this market yet that you would often look to get when you form a spike low. But then we'll be watching this very carefully tomorrow. So again, just going back to last year and the FOMC statement, when we had a breakdown, and the following day, that was the low. That was the low we put in. We got a retracement the following day, consolidated throughout December, and then the big moves really happened in January. So watching this level, and it does have the markings of a V-shaped reversal pattern at the moment, but we'll see. We'll see whether this holds or not. So watching that carefully for that. Now, also moving over to silver, of course, we've had lots of questions on silver as well. So silver could be trying to do a spike low here. It's come back down to lower end of the trend channel. It needs to close back above $16.15 per ounce here in order to show, okay, that it's just overshot support. But if it closes back above $16.15 per ounce, that will start to show some evidence that we're getting supported here on silver. Again, break it down into lower timeframes at the moment if you want to get an idea of where these spike lows might come in. We've formed a bit of a rejection candle around the 1590 zone. Very important how these markets close today. Is silver, is it going to be a bear trap in the sense that sellers will get in on a break of support here around 1617? So if it retraces back above that level into the close, traders who are selling, they're taking advantage of the sell. If they got in too late, need to reconsider their position and potentially get out of that sell if it closes back above support. So today for me, very important day for both gold and silver, especially if silver here, which is shown on the gold to silver ratio to favor certainly more upside than gold. Silver, you've got to remember, is still up over 17% this year. Gold's up about approximately 5 or 6% now this year. So silver is the stronger of the two metals. Now, we looked at this as a potential sell short yesterday for a break of this bear flag pattern, which of course we saw over the course of the FOMC statement. And now it's all about the close. How will silver close today? How will it do tomorrow? We're coming back down to the lower end of the trend channel here. I'm also watching silver very closely around these levels, bearing in mind what happened last year as well. Now, of course, it's not exactly the same market conditions as last year, but we did have similar projections in terms of 4 interest rates were projected for 2016. We've only had 1. 3 interest rates hikes have been projected for 2017, and of course we'll have to see how that pans out over the following year. But at the moment, yes, we're definitely at key levels. Today is a very important day for gold and silver. Now, going back to oil, I had some great questions on this earlier on in the week as well, and we can see here a bit of analysis we were doing earlier on in our live trading room. Essentially, what oil did on the open is it gapped 5% on the Sunday open, quite a significant surge higher, came back up to the upper end of the trend channel, hit $55 per barrel. So you can see this is the gap on the open. See if I can just break that down for you. 4-hour chart here. So this was the gap that we got. We got a gap and a surge up to $55 off the back of non-OPEC members agreeing a deal with OPEC members to limit production by approximately 500,000 barrels per day. And with that, we saw a big gap on the open on Sunday. This was the gap. Now, as is very common, the gap got filled. Even the previous weekend to that, we saw gold, silver, US dollar gap on the open, and those gaps got filled very quickly. It's very common for a gap to get filled like this. And that was a great shorting opportunity, actually, just in the short term. Take advantage of a bit of a blow off top here for oil. And it's obviously retraced since then. And we can see where it's just correcting at the moment. And it's pulled back from this big rejection candle. And right now, oil, it's decision time as well for oil. And I'll put it on a raw chart to really break it down for you in more detail here so you can see exactly what is happening. Okay, so if we go over to a weekly chart on oil needs a close above previous resistance here. It needs to close really above the 51 and 52 zone to maintain its upward trend in the short term here. If it closes above those levels, which was a very important level for oil to break out from, yes, then it has the potential for then previous resistance to become support, and we can look for the next move higher back up to 55 US dollars per barrel, and ultimately for a potential move back up to 66 US dollars a barrel, sorry, to 60, excuse me, US dollars per barrel. But the way oil is behaving at the moment, you can see where it's breaking down. It's given back most of the gains over the last week. If it cannot get a close above 51 to 52 zone, if it can't close above it and it has a further corrective pullback here, then we could be in for some more action to the downside. The bears could take short-term control of this market for oil. We could see a further corrective bounce, and I would look for moves back down to lower end of my trend channel, the 50% level. So if we just take into account the lows just prior to OPEC here, and we take into account the highs here, which we reached in the weeks after OPEC and a couple of weeks afterwards, you can see the 50% level at the moment is at 49 US dollars per barrel. And that could be a level to also pick up certainly an event area. We'll see how oil holds if it gets as low as that point. At the moment, we can see oil, it's filled the gap off the open. And what I would look out for here on a closing basis today and also tomorrow as well, in order to regain a long position here and look for the next opportunity to go long, what I would look at is some sort of rejection candle forming around this zone. So if we get a hammer, if we get a bounce at this level here where we are at right now, I would look at that as an opportunity to re-enter for a long here. So it needs to develop some sort of rejection candle at this zone, produce a hammer, and then we could be up and running for the next leg higher. Previous resistance becomes support. So today is important for oil as well. So certainly I would be watching this market too. And whilst we're on the subject of just retracements here, we can also just bring about sugar on the chart. I do think it's worth noting at the moment where sugar has hit the 61.8 Fibonacci retracement level. It's had a bounce off that zone. You've also got trend channels here, which you're finding exact support on at the moment. From a fundamental point of view, we've seen a lot of liquidation of positions here, but still should be supported around these levels. It's been quite a large correction. The 61.8 Fibonacci retracement level will be important here for sugar. I am monitoring this zone also for a potential bounce. US dollar strength has also had a part to play in this recent pullback too, but we're back at a major zone. So we are at a turning point here, potentially. If we can hold on to that level here for sugar, I would look out for some bounces at that level. So just to put that on your radar as well. Now, no surprises here. Platinum has pulled back as well. It's back down to lower end of the trend channel around the 900 zone. Doesn't really want to break that level. It's really just moving sideways, continues to consolidate between support and resistance. So I am watching platinum at the 900 zone here and keeping an eye on that. I do think today is a very important day for gold, for silver, as to whether they're going to continue the momentum down or whether we'll get some sort of spike low at this point in time. So we're watching both these markets very carefully. So with that, I hope that gives you a bit of insight into what we're looking at the moment, gives you a bit of an update from the FOMC statement. I'll talk you through the top trades that we've had over the last week here. Okay, so the top trades have included the following using our exclusive research-driven strategies. So we took advantage of the sell short on oil earlier on this week, gap on the open to the upside, filled the gap, and we've just profited there. Nice, easy, very straightforward trade, a gap fill, 260 points profit on the oil sell short. We've also taken advantage of palladium after it got into a very overbought condition, up over 20% over November, started to correct, just took advantage of the retracement back down for 280 points profit. Natural gas, we took advantage of another breakout above the key resistance levels. It was building up some pressure here for a 360 point gain. Platinum, of course, last week we also just shorted it from resistance. It's just moving between support and resistance. That was a quick 210 points profit. Now, if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, all you need to do is go over to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, and in terms of what you get access to, whether you're a new trader and you just want to develop a solid understanding of the markets, fast track your results, or even if you are an experienced trader but you want to take your trading just to that next level, the private members live trading room is definitely something for you to consider. So the private members live trading room includes the following. You get access to our live trading room webinars. So you can watch the Gold and Silver Club expert traders analyze the markets right in front of you. We pick out highly profitable trade setups, share exact entry, exit points, profit, stop loss targets, as well as walk you through live trade ideas ready to implement for instant results. You get real-time notifications via email alerting you and SMS alerting you when to enter trades. Also, profit targets, stop loss, entry points, everything is provided for you. All notifications sent out in advance to ensure you've got lots of time to get into every position at the best possible price. And you get commodity research and market insights. So you get exclusive access to our proprietary research and insights to help boost your win rate and ensure you're getting on the right side of every trade. Our research is there to really guarantee you get the ultimate edge in the markets and fast track your results. So again, you get access to the following: exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, real-time notifications via email, SMS so you don't miss out on profitable trades, details of where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and insights to give you the ultimate edge in the market. So again, all you need to do to get exclusive access to our private members live trading room is go to www.jointhegoldandsilverclub.com, complete the application form, and we will of course get in touch with you ASAP. I will just add to that as well, we get a lot of applications at the Gold and Silver Club. We've been inundated over the course of this week. Please just do mention that you have been on the FX Street session today, or even if you're watching the recording, there's a special offer for clients of FX Street. So just please make sure you put that into the comment section, okay, when you make an application. Okay, fantastic. So with that, guys, have a fantastic end of week for your trading. I wish you a profitable trading. Have a great weekend, and of course we look forward to speak to you all real soon. Okay, take care, guys, and we'll speak to you on the next one. Thanks, guys. Bye bye.